Well, good morning everybody. Welcome to Stockradar Stocks and Moon for another week. Today's day is the 28th of March 2024. My name is Richard Lee and I manage the Stockradar.com.au website for you. Well, welcome back. After a week of absence last week, I apologise. I was on the road. It was pretty tricky to get to a video, and I'm also going to have the same problem next week. But this week I'm back with you, and the week after that I will be back to normal once we've settled down for school holidays and Easter time. So sorry about that, but we'll be back to normal shortly. So for this week, positives I've seen over the last week or so has been copper, which had a bit of a break up. I know it came back a bit, but it is holding those gains. We'll have a look at that a bit later on. So stocks like Stanfire are benefiting, and of course things like BHP and Rio also love that copper price rising, so that's always good. Our 5 and 10 stocks portfolios are full and running hot. You know, we only need a small group of stocks to get those portfolios full, but they're doing quite nicely at the moment. Okay, so you can see Ampol there, which we'll have a look at a bit later on. Actually, no, we won't. We'll have a quick look at it now because it's running on well. I know it's come back the last couple of days. But it'll be up again today. It's been really going gangbusters for the last few months, despite Brent crude not doing much there. Anyway, onto our top 10 for the week, and it's a pretty good group of top 10 this week. So firstly, we've got Ampol, which we just looked at, and you can see that there, looking very nice. Goodman Group is just going gangbusters. It keeps going from strength to strength. It had a trend reversal, it broke to new highs, and it's just really in a rampage for the last few months. IAG keeps edging up along with QBE, those insurance stocks. There's some pretty steady demand for those stocks, although they're not knocking the lights out, they're moving here pretty well. Magellan just keeps surprising us on the upside, as trends always do. Don't be surprised. NextTC's had a good performance since its breakout. Suncorp being released from all that ANZ business is now starting to run on well. Telex is a new one that's going, and also some recent stocks, Orica and Sandfire in the top 10. Now, we do have other top 10 ratings, excuse me, but they're the main ones there we're looking at the moment. So there's some good stocks there. If you had all those in your portfolio, you'd be doing okay. All right, now the stock pick count is up 2 this week. So again, we're not going blindly, massively adding stock pick after stock pick. We're just adding a little bit here, a little bit there, and the count is just increasing slowly. So we've got 54 stocks of 160 covered and 14 ETFs of 23. Most of those ETFs are, of course, index ETFs. Okay, so that's the stock pick count, and a little bit of a portfolio update this week because we are going a bit better. You can see the 3 top portfolios there, all since inception of 2003, have just edged up a little bit, which is good, but they're the longer term ones. They're all full except for the conservative. And then our shorter term portfolios from August 20, March 21 are starting to get those gains going quite nicely, up 8.1% for the August 20 and 7.6% for March 21. So they're full and they're starting to run on quite nicely, and they've got some good stocks in them. So that's where those portfolios are sitting at the moment. Okay, so what we're going to really look at today, we'll look at a bit later on with the stocks, is we're looking at breakouts with yield support, which is always a nice thing to have because often we do pick up a check here and there, and there's some great stocks yielding out there at the moment. They're also running along well, so it's that double whammy of breakouts and yield support. But first, let's get to the overseas markets. Okay. Dow Jones, I think it's up another 500 last night or something like that. It's going well. There's just really no pullbacks. There's undying demand for these indexes. They just keep going up and up. Even this selling here, this heavy selling here, really caught a little movement on the price, and the stock's back up again, or the index is back up again. So that's just showing us that there's some very good demand and selling is being absorbed. A bit of selling's not a bad thing for the market to have anyway. It just brings a bit of froth off the market. This one, the S&P, it's just really had the red bars are almost invisible in there because we've been going up since last September pretty well, or last October. So it's just broken new highs and continuing high. Everything's bullish there, moving average volume and momentum. Nasdaq, it's broke to new highs. It's looking good. It's just edging above its highs here. Again, not going crazy, but we're seeing a bit of selling occurred here. Didn't do too much to the price. We got a little bit nervous because there was a big drop, but in the scheme of things, which is always what we like to do, is get back, take a look at the big picture. Don't worry about the day-to-day stuff too much at all. Okay, we're weekly traders. Okay, so the Nasdaq looks fine. So our index, again, it's being a little bit more controlled and poised in those markets. It's made a new high. The trend is up. It's just had some, it's high highs and high low situation. So it's just been it's just moving higher, which is great. So again, money driven by those banks, which have been really nice of late, and a couple of the other leaders, which are doing quite well at the moment. Not so much the resource stocks, but maybe they'll catch up shortly. You never know. Okay, commodities, gold, as you said, is holding its gains. There's been no real selling. It's hit this market, or has hit it, but hasn't dented the price much. So the breakout's looking a bit more valid. It took a while to occur, but eventually did get in there. The demand's back in there, and we're seeing copper now trying to follow that lead. We had a break above R1 a couple of weeks ago. It came back a bit on some heavy volume, but we're still holding on to those gains pretty well. So that's a pretty good sign, I think. So we'll look for maybe a test of R2 shortly. As I say, baby steps, little bit by little bit. It's got a lot of work to do up above here to really start moving ahead. So it may not be a huge rally at the moment, but it may just edge higher, which is what we like to see. No froth, so it makes things a little more steady, a little bit more easy to handle. And Brent crude again, well, it's sort of kicking up a bit of volume there, not too much. I mean, really, the average is flat. Volume is not telling us a hell of a lot. Momentum is flat, so there's no real sort of breakout there, but just quietly looking a little bit more stronger there on Brent, which will be nice, I guess, for some of those oil stocks. Okay, so that's the overseas markets. Now, I mentioned to you before, we're going to talk about some of these couple of these stocks with good yield support. If I just go through some of them today, Sandfire's not really a yielder, but it's going ahead very nicely. It's the first stock we're going to look at. But then we move on to stocks like Metcash, yielding 5.7%. Harvey Norman yielding 5%. They've just recently broken out. Super Cheap Auto broke some new highs not long ago, still yielding 6.7%. Amazing. And we've got some downtrodden stocks that I'm going to look at today. Bank of Queensland, 6.6%. APA, 6.7%. Australian Sports Groups, which is outside our group, a smaller stock that I'm looking at, which is 7%. And Insignia Financial, which fell out of our group because it just got so weak from $11 to $2. Market cap got too small, so it was knocked out. But I've just had a look at that one there, yielding 7.9% at these prices. And we look at the chart there, it might be a little bit interesting at the moment as to what we've got there. And of course, Ampol, it yields 6.2% as well. Some of those are good franking, some of those not, so depending on what suits you. But they're the yields there for you. And a special mention, as I said before, to Goodman Group, which has just gone ahead and gangbusters. It doesn't yield hardly anything, but we don't really care. If the trend is up and it's moving like that, it's rewarding us. But anyway, let's have a look at some of these stocks firstly. Sandfire Resources, which is we just saw recently had a nice little breakout above that 750 area. It's now about 860, holding pretty well. We've seen some good volume there, although it hasn't been sort of this sort of volume, but we just slide back a little bit there. We can see there's a good volume here, good momentum. It's above the average. That's why trend intensity is rating at 10, so it's fine. We just raise our stops with these stocks. And it's been it's a pretty significant breakout really. So that's back from 2021. We've got quite a few highs here. So it does make it a significant break, and that's why it's moving here quite nicely as we get that market imbalance where the situation where the sellers have been selling and all of a sudden their price levels have been blown out, so they're going to buy their positions back, which adding to the already existing fresh buying means the price has got to go up until that market imbalance comes back into balance again, and then you can see some sort of pullback. That's why these breakouts tend to occur the way they do, because you get these market imbalances between buyers and sellers, and when there's more buyers and sellers, the price can only go one way, and that's up, and that's what we like to see. So Sandfire, trend intensity rating of 10 is looking great. Metcash, been a nice little breakout here. It's just a slow starter, but we've got this big switch zone here where we've got the downtrend line here, we've got the moving average line, and then the horizontal resistance line here between those two lows there. So that gives us our trend reversal pattern, and it gives us our evidence that the market's turning up because it's broken above the average. Then we look down to the volume, and we see the volume increasing, and we can now see the momentum starting to move above zero. So it's come back to neutral. In fact, it's just rising above zero at the moment. So for Metcash, it's looking quite interesting, I think. A good support down here. It's now starting to rise quite strongly. It's got a good yield, as I said before, and the volume is very good there. So that's a really good substance-based rally there. Still only trend intensity rating of 5. I'm not knocking the lights out, but we need this above here and a bit more price gain to get that rating up higher. But often you do get this situation where you get a stock that's come down from a downtrend, and that trend intensity rating may just start off at a low level, start off with a break at 5 or 6, and then it moves into that 789 area. So that's what we're looking for Metcash to do at this stage. So let me see what happens today, or for the end of the week. See how it goes, see how it finishes the week. But it certainly looks like it's got a nice little trend reversal here, and we see that nice little switch zone, which supports the turn and trend. Harvey Norman's a little bit further down the track. It's had a big sort of base pattern around here after quite a big downtrend pattern for a while there. It's then broken high. We've got this switch zone here again. We've got the downtrend line here. We've got the moving average, and then finally we get this resistance point taken out. Sometimes it's hard to isolate that exact resistance point, but we're trying to err on the conservative side here. So we've seen all this happen down here. We're now starting to see the volume get on board. Momentum's kicking higher. So this has been a fairly valid break here. Conservative, but it puts things right in the odds right in our favour. This is going to go higher. So Harvey Norman's looking quite good for the moment. So hopefully that will continue high. The next resistance is really up around $6 at R1 up here. So that's one to look for Harvey Norman. Super Retail Group, a little bit volatile sometimes, Super Retail. You can see here with some of these cracks down can be a little bit jumpy. But it seems to be now holding okay. We've had a good breakout here. We've had 2 thumps down, which is a bit nerve-wracking in situations like this. But it's slowly climbing back higher again. We really need to take out these highs at the moment. So it's still above our stop, still holding there. We've got a new high there. It's above the average, which is now providing support. Volume there. Okay, we saw a bit of selling going through here. Okay, and it did cause the price to drop, so we are a little bit wary. But trend intensity still holds at 7 because we're above the average. The trend is up. Volume's a little bit indifferent, but momentum still holding well above the zero level, so it still stays positive. Those slight short-term weakness there. So we're in for the big picture, and we'll keep an eye on Superchip Auto, and it does, as I say, yields about 6.7% even at this price. So pretty amazing, really, and it's a lot more than you're going to get in your cash management trust. Okay, so that's Super Retail Group. The other one I want to have a look at, 2 I want to have a look at here now, or 3 in fact. Bank of Queensland. Okay, it's had a terrible time for quite some time. I know it's come from way up there somewhere. It's now right down here at 550, and it's now levitating. 622 finished yesterday. Okay, so we've got this downtrend line here. We've got the moving average line here. Then I've got a resistance point around here. And I'll be looking for this area here up around 640, 650 to break before I get involved in this one. It's been a long downtrend. There'll be a lot of still people waiting to sell into rallies at this one at the moment. But that's where we see the change, where the sellers into the rallies start to get less and less and less, and the buyers start to get more and more, and that's when you get the turn. So this is what we're looking for at the moment, this turn in the price, which is slowly happening, but I need a little bit more confirmation there that this downtrend is broken by rising up above 650. But we're getting a little bit of volume, momentum's just turning a little bit positive, just moving above the average, which has provided support. So the picture is just starting to get a little bit changed, a little bit to where we want to see it. So, and again, as it has come down a long way, there's probably a good opportunity here, and it does yield 6.6%, which is again a nice little cushion to have when you are holding this. And your downside is probably limited here now that this support's pretty well in place, I would think. Okay, so that's Bank of Queensland. Apart from putting its foot in its mouth, it looks like it's going to be a good opportunity, I think, Bank of Queensland. Okay, the other one is APA Group. It's struggled to get off these lows for a long time, but if we go right back here and have a look, this is your trading range for APA Group. This is what it's done the last few years. So we've seen the rally here, we've seen a crunch down here, a rally quickly back up there, crunch down, rally back up there, crunch down. Are we going to see a rally back up to here? Well, possibly. We're starting to get on this second test here now. We're starting to get some good volume appearing down here. Let me just blow this up a little bit. So we're starting to see a bit of volume appearing here. Momentum's just showing that the selling pressure might be starting to wane. It's still fairly negative at the moment, and we're still below the average. So this is not nearly as far down the track as perhaps Bank of Queensland might be. But it's certainly worth watching. It's a major support level here. It does yield pretty well. 6.7%. Can't tell you what the franking is there on that one, but still, it's an interesting stock, APA Group. Did some very good things. So if it does get on its bike there, back to $12, is quite an enticing opportunity there. So keep an eye on it. We aren't there yet, but there are a couple more levels we've got to get through yet. This average here, and probably up around the 880 level before we get a confirmed turn. Anyway, one to watch. Keep your eye on it. It looks interesting. Okay, now outside my zone, as I said before, outside the 160, I look at a couple of smaller stocks. And this one's been coming up on my radar quite recently, quite a few times, just Aussie Auto Sports Group. This is the old resistance up there at $2.60, which is just starting to break above. And if we can see down here, it's a bit hard to see because it's pretty little bit thin, but you can see some good volume starting to appear here on this break. The momentum's turning up. The average is up, and it's made a major new high, this one. So its trend intensity rating would rate at 10. So it's looking very interesting, this one. Again, it's a good stock. It's got 7% yield at this price. So, it's an interesting stock for you to follow, and it has that little cushion there. I think I might have just paid a dividend, but anyway, I'm not too sure it's gone X yet. But it's certainly on a price basis itself, it looks very interesting. And it's in that little area called sports, which we all love, and we know is doing so well these days. So one to watch, an interesting one, a smaller one stock. And I said to you before, Insignia Financial, which we did cover, but because it fell so far from $11 it's been up to, it's can now come down to $2, that's a huge fall. But it's now starting to show some encouraging signs, I think, down at these lows. Trend intensity rating is still -5, so we're not there yet. But we do have, remember this switch zone thing that I look at? We have the support down here. We've got a little bit of resistance line going right back a long time. We have it above the average, and then we have a little bit of a downtrend line down here. So I don't have a clear resistance level as yet, but we can see the demand is lifting here, and this is starting to move back towards a zero level, so it's a good sign. So it's one of these ones that is starting to turn, and one for you to keep an eye on, because it could be a very good opportunity, and it's yielding at 7.9% at these prices, which is not bad at all. So Insignia Financial could well be an opportunity. Just keep your eye on it. Don't do anything yet because we don't anticipate. But we just make sure when the odds get right in our favour, then we're certainly going to like that. And I sort of like this volume pattern here, because even though we are getting some selling here, it's not pushing the price back to the lows, and we're getting some good, nice, big, high green bars here with good buyings punching in there, which is a really good sign. So again, this is early days of building the evidence, and it hasn't completed yet, but it's looking very interesting and one worth watching. Okay. And I just want to finish off on a good note and blow my own trumpet a little bit. Goodman Group has just been such a good stock for us. We've had two trades in this whole pattern here, but it's gone from basically $18, it's now $33, and that $18 level was about just over a year ago. So it's been an amazing ride, and it's been a really good one. Trends always exceed on the upside, as we know. So all we do is raise our stop on these ones. And if you want to know where those stops are, you have to go to Stockradar. But that's all I will do in this situation. And you just see these patterns occur time and time again. And we're in that mode where the market is doing that at the moment. Buyers are keen again, and buyers are exciting. There's lots more stocks potentially can come in yet. So there's lots more opportunities to come ahead. So stocks like these will certainly rear their heads shortly. Okay, so that's Goodman Group. So that's the stocks I wanted to go through today. Just to give you an idea of some of the good stocks that we're looking at with some high yields, some breakouts, and some good old trends which are moving ahead really nicely and making lots of money for us. Okay, so now I just want to go briefly just to mention a couple of things to you. Firstly, on the portfolio side of things, just a reminder, the way I run my portfolio is basically to maximise the potential of the stock picks. So if I have some good stock picks, I only need 5 of them, or maybe 10 if you want a 10 position stock holding. But we only need 5 in our portfolio, which is our best performer. And so as long as those stocks are good, the portfolios will perform well. So we only need a few stocks. It's low cost because it's low activity. It's also safe because we use risk management, and it's also very simple to manage. Okay, every week's an email for you, just highlighting you the entries and the exits, and that's all you do. 15 minutes work a week. So it's not a bad job to have if the market's going up nicely. Okay, so that's the portfolio focus. Just about the portfolios, I'm a high conviction. I believe in what I do, so I focus on what I do and I don't diversify. The traditional thinking says the safety of diversification is a sound strategy and helps trim the edges of mistakes. However, it seems it may also trim the edges of winners. Now, we don't want to do that, because what I do is maximise the potential of the big trends with the Goodman groups, the car groups, these sorts of things. You've got to get those trends and you've got to maximise the potential of them, and that's what we do with our stock pick behaviour, okay? So that's where I try and maximise what I'm doing. I don't want to trim the edges of my winners. I want to make sure I am focused on my winners and making a lot of money. So conviction is our best friend. Have belief in what you do, and my objective is to follow trends and to get growth, and that's what I shoot for. Okay? On our blog this week, I've been doing a few more blogs lately for you. This is all free for people to read and to get an insight into what I do and what I think. A very interesting article came out a few months ago from Jim Chanos, who was a fairly well-known fund manager, and he was talking about the demise of fundamentals. And whilst the demise of fundamentals might seem an ominous statement, it prompts a necessary evolution in investment strategies as things change and develop. The full force of behavioural analysis is descending on stock price movements. People are trying to work out why their fundamentals are perhaps leading them astray. Well, that's because it's more about sentiment, more about human behaviour that are driving price more and more these days. So many people involved in the stock market these days, not just the specialists, not just the experts, not just the fundamental analysts, but all sorts of people trying to make a buck out of it. And they're starting to realise now that it's price behaviour that can drive prices far from fundamentals, both upside and downside. So you need to understand behavioural analysis. You need to understand trend behaviour, what people are doing, the waves that these stocks move and things like that. So you get a read of that. It's on our blog and it's free. So it's an interesting insight into what's happening in the markets. Okay, so that's all I've got for you today. I won't be here next week, as I said. I'm going to be going up Kosciuszko with my son for a few days, but then I'll be back for the cold winter in Melbourne to do some serious work again, and hopefully this market continues ahead for the year because it's been a lot of fun, and I'm enjoying it at the moment, as I hope you are too. Okay, so watch your trends, heed your stops, stay safe, and I'll see you all next week. No, I won't next week, it'll be the week after. Thank you.